Welcome to Macro Crest, where we focus on fundamentals for directional bias and then technicals for entry. Last week we had, this week we had PMIs, which are leading indicators, and what we do have here for the euro is bad. It's generally bad for the euro as the first set of indicators that we can work with. And for the dollar, the flash manufacturing PMI came out positive, and it's still, as market expected somehow, but it's still above 50. So that's bullish. The Powell was kind of dovish when he spoke, but that's by the way. That's just for short-term movement. We had this CPI from the Aussie, which is very very powerful. They are showing Aussie strength. The S&B policy rate was bullish, and then the GDP for the US came out massively positive, just above all forms of thoughts. So that's the boost for the dollar short term. And then we had the core PCE, which came out as expected. And I think I saw a housing issue. Okay, the new home sales, yes. So this was massively positive. It's a leading indicator for the dollar, and that's bullish for the dollar. So that's why dollar is bullish in a sense. This week, what we would be having is next week, what we'll be having is quite funny, but it's just as though NFP was just a week ago, but now we do have another NFP. Okay, the most important thing are these sets of PMIs from China, Aussie interest rate, which will still be holding. That's what we're anticipating, right? But if they shock us, then no problem. We have the PMIs, the second set of PMI data from the Euro region. We also have the inflation data, which is very very important for the Euro. And then finally, we have CPI for Swiss. We have UEDA giving a speech and the labor data, but then the biggest is the ISM service PMI and the labor data from the USD. So without wasting much of our time, we go into the chart. Let's clear all this. Let's not clear anything. Let's just look at it this way. Looking at this, the market is bearish, right? And I was anticipating a market to drop, which it reacted exactly at the area I expected, but it did not come lower. So yes, here's the deal. The problem I have. This is an area of interest for me, and the market refused to break, rejected with this week. Now it has created a higher high, higher low, higher high on this time frame, so I'm expecting a higher low. So in instances like this is the next point, this supply, but most importantly, this area is this is a liquidity point for me. Potentially I'm saying price taking out this point, and this is a bullish kind of scenario for the dollar in my view, because the market is bearish, right? Yes, but don't forget, this is a bearish, this was this leg, right? That's the leg, but then it is the downside. Potentially we could see this too, because this is the range we are working with. This is now the range, and there is a supply here. So if this is kind of a high probability supply area, so this is what I'm looking at. Instances of that nature happened somewhere here. There was a break of structure at this point. We had this break of structure here. This was perfect, and the markets was pricing in still bullish instance. We had a very massive candle, but it failed to close above this point. So we knew very well that it's supposed to come and break this. It's just looking at it in that angle, and so we are looking at a bullish dollar, which is boosted by the GDP report that came in. So with that, going to the chart, the USD Swiss is one of those setups. So what can we see here is what you can see is we had this range. Okay, so this was the last range. Sorry about my drawing. This is the last range, and then this was never taken out. It now reacted. So that's when we had this push all to the extreme. If you remember very well, that's some 1 year ago or thereabout, and then the market started dropping. So what we do have here right now is potentially we might be seeing a new phase in trend from here, in as much as we might not like it. So that's just an imaginary point in time. Looking at this is massive rejection, but it was not a break. It did not close below. So let's just see. That's going to the daily time frame. This is our range, but now it's broke structure here. So on this time frame, this is our range. So we might potentially see price do this. Okay, so but there is a supply here, so we might work with that supply. If we have these points, beautiful. So for USD Swiss, this is what I'm looking out for. I'm expecting a move this way, 0.1, and then we have this 0.2. So due to that range, USD CAD, it's bullish, massively bullish, but this is the range. As you can see, this is our range. Alright, so it's still bullish. I don't expect the market to just start dropping anyhow. So if we should see a push from this demand here, it will be fantastic. So that's what I'm looking out for, and it's the demand that broke this. So that's like a PCP pattern for those that trade supply and demand. And then the Aussie USD is quite nice. Look at this. Overall, this is a bearish trend for me, but on this leg, this was a bullish trend, bullish leg on the weekly time frame. So on the daily time frame, we had our range, we had this low, we now had this low. You see, it fell to close below this point, and then this was our liquidity area, but then it just took out the entire point. So this was it, and now this was a higher high. So this is the range we are playing with, and it is inside this range. That was why I was looking for short, which I showed last week. But the only problem I have with this is I was expecting price to come here, right? And then we reacted also. I was in a long position in this point, so I got a buy somewhere in this area, held it. We had a new high on the lower time frame twice, then we had a break to the downside. So this was a pullback to short. It was a good one because I was already anticipating it should come here. But now this week, what I'm looking out for is a break here, push to this point. It has already broken lower time frame. So if we are to look at it that way, we have our break of structure here, and then this is our range. So I'm expecting a deeper pullback, and then I can long from here. So Aussie USD is bullish in my opinion, just for this time frame. And we have the Euro card for this week. Last week I was looking to short it, which it was a very good shot. But then looking at this time frame, this is our range. This is our range. I was expecting this to come lower, but coming here, it broke this structure from there, broke this. So this is the points we are looking out for potentially. But if we should have a liquidity grab, and I see signs of bearish momentum, then I would definitely look to take price all the way to the downside. It's just very, very plain. So this was the trade last week. Fortunately, I'm not in the position anymore. So unfortunate. But that's what we're looking out for. And then the Euro NZD. Why? All this is due to Euro strength and card strength. So the Euro NZD, I don't like this price action. This price action is not clean for me. Generally, this is bullish, right? You go into the daily time frame. The range at which we have is this. So this is the range we had here, and then currently this is the range we are having. So I don't expect myself to be longing up here. I'm expecting a pullback here, then continue the longs, because Euro is stronger than the NZD. Then we move on to the Euro USD. So this is equivalently the same thing as Dixie analysis. This rejection is too much. Okay, going to the daily time frame. There was a break there, so this reacted very heavily. But I'm not looking at this in that sense. Look at this. We have this range, first range here, before we can talk about this particular range. Alright, so this is the first range. If that's the range and then we just broke in, the only thing we can look out for is, okay, we are bullish, so we might buy, but the question is to where. That's why I look at my 4 hours, and all I can say is this was the first break of structure, so this is our range, and then this push. I'm looking at price coming in before we might say there is a short due to USD strength. So basically that's just what I see, and I was not in this position. I was in GU, so but we'll get there. We have this and the price action is no more clean for me. And then the final guy for this is pound card. We've been talking about the pound card. This was our range. Let me clear everything. I was looking to short it last week, if you remember. So this is our range. It's perfect range. We had this pullback dip in. Okay, so going to the 4 hours. This is going to the 4 hours. We now had this guy. It was supposed to break this structure. It failed to close here. So all this is what I might consider a break, and then I'll take this the upside. Is because of this is already a bullish market. This is already a bullish market. So this is a high probability setup. Now this is a technical point of view, not due to fundamentals. This is just technicals, because fundamentally pound is weak, card is kind of strong. So but you don't know who is going to be stronger than who at which point, except you look deeply, which I don't really have such time. Looking at the weekly, what I do have here is a bullish market. Going to the daily time frame, this I would consider is, let me clear all this. It has been a beautiful setup. We just got a break here. So this I look at as my range. So there is a demand here on this daily time frame, and I hope to continue that. Looking at the weekly candle, the previous weekly candle is bullish, and we had this other candle high. Going to the 4 hours, what we do have is this point is in tandem with both of them. So I expect a pullback here to continue longing. And if you look at this on your 1 hour time frame, this has been a very beautiful pay to follow up. We had this point, we had this come in to our demand, which was perfect setup. I did not take it last week. We had that, and we have this push. So if I have a push here, I'll look for lower time frame confirmations, and then I'll take that. So that's what I'm looking out for. GU, let's look at this. Aha, so this is what I've been looking at. We've been bullish, and now we are bearish. It's quite simple. So let me show you what I'm saying. We had this breakout structure, and this is our range we are playing with. This is the entire range we are playing with. So our target is this low here. Coming in, we had this internal breakout structure. So what we do have is lower low, lower high, lower low on this time frame, and then we had a higher high. So this was now a break to the upside. So this was the range I was looking to play with to buy higher due to dollar weakness as at then. But going to the 4 hours, price reacted at the supply, which the previous weekly supply was a bearish pin bar, if I'm not mistaken. So now this was a rejection, that rejection in the Dixie, showing a pullback, and now this pullback has just broken structure entirely. So if we are to short, of course, a lot of people will be shorting here, which is not bad if I see a confirmation entry. But my range now is this on this time frame. This is now my internal range to short, right? But the main range is the main range is this now, and probably this. But if this should break and do a deeper pullback, okay, then we can short heavily. So that would be something like that. So now why I longed was because when I looked at that range on the 1 hour time frame. This was what I anticipated as a lower low and a lower high. This is the first break, so this is now my lower low, so I'm looking for a lower high. Went into 5 minutes, 15 minutes. Let's just use the 15 minutes. So this was the first break, and then I got in from this demand area. So this was it. It's just one of the best trades of the week anyways. So that's it, because it created a lower low trying to, and we anticipate a lower high, and that was just it. Okay, so going to the NZD card, which we were looking to long it from this point higher, but now we are short, very bearish. Looking at it from a weekly time frame, the first thing we see is we are bearish, and it's quite nice. Going to the daily time frame, we have our supply, this supply. So this supply is where we'll be shorting it. This is also a high probability setup. Why? Because on this time frame, the daily, I said this is a potential lower low to make a lower high, because this is an internal range on its own. So if that is it, this still has potential to go lower. Going to the 4 hours, I have this as a low, so this should be a lower high. So that's it. NZD card is beautiful. NZD Swiss, I've been looking to short it, which I mentioned it last week, so we are still bearish on it. Looking at it from a daily time frame, as we can see, I was anticipating a pullback to short, but there's no pullback, so you would have kept longing it on your lower time frame, like the 1 hour. So it was a perfect kind of setup. We had this was a good trade last week also, but I did not take it. I marked it out but never took it. And then we are having this NZD yen, which I'm looking at taking it to the downside, taking it all the way to this point, but I'm not trading that. It's the NZD USD that's quite interesting to me. So we can see that I was looking to long this year because of this breakout structure here, but at the other end, remember I said this is our range, this is our higher range, so this could have just grabbed liquidity. And of course, if you remember, there was a zone here that was never mitigated. It had to use it. Now that's it. So if we are looking at this angle, we now have our range here, which is this. So we might be seeing a lower time frame pull back into this zone to short, and then we can see another deeper pullback. Now this is, dollar is still overall bullish, don't get it wrong, but due to the fact that the market is already pricing weakness in the dollar, that's why. So let's just check out for the gold. We are bullish, it's already bullish. The daily time frame is bullish. This range is quite huge, but this is good. It always spikes until it spikes no more. So what I have here is this is the range I have up here. This is the range we have up here. We have low break here. We had this. So this was supposed to be a range, but the market just grabbed liquidity. I don't even know if I'll call that liquidity, but it failed to close above. It's actually supposed to close above. And then remember, this was the breakout structure. So let's go to the 1 hour so you could see it clearly. This was actually the breakout structure. So all this is internal, and actually this could be a bearish liquidity grab. This was a higher high, this is a higher low. Now we have this higher high. So if there's a higher high, we look to short it all the way down. In fact, this would have been a good shot up here, but what I'm saying is following up the bearish movement to actually look for longs later. So that's what I'll be seeing. I'll be looking out for, nothing much. And then the USD China, yeah, I was looking to short there, but unfortunately, so this is overall bullish, but then this is a liquidity grab. So I'm looking at a bearish market here on the weekly. Now on the monthly, this is the range we've been working with. So I was expecting a short here, which the short just lasted for a couple of, I think, a day or so. This was just a small pullback, and I've not done anything about this guy anymore. So what I'm looking out for is a push from here all the way down here, all the way up there, sorry. Why? Because if you look at this is bullish, this is our range, this is bullish. It's just, so this is what I'm expecting, nothing serious.